Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it is Thursday, and today was definitely a bit of a tough day at the office. You know, the past two sessions we, opened lower and we kind of held in there. Yesterday, the president came out and warned Wall Street to take this seriously, and I guess he kind of got what he wanted. You know, a down day, so the rest of the world might put pressure on some type of compromise, but either way, it's not very easy. You know, you even trying to be short is tough. You have to kind of anticipate the short and short when things look good and blah, 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 buy them when they look bad, when traders like to really buy high and sell higher or short low and cover lower. You do have a few specific cases of that, but, you know, it's not the easiest environment. And every day now that you have whippy headlines, and we saw what happened with Washington when there was someone in a car that it was a lockdown. We sold off but held in there. So lots and lots of mixed signals. And when you have all these mixed signals, you know what? If you're on an intermediate basis, low gross, low net. I've been saying that for a week and a half. If you're a macro investor and you're going to close your eyes and you're my age, 41 years old, believe it or not, I'm 41, I can't believe it. I feel pretty good. But anyway, and you're looking to be in it for 20 years, keep with your monthly plan. You know, if you're 30, do the same. If you're 66 and you might need your money out in the next month or two, then, maybe sell half. Who knows what's going to happen in the next 4 weeks or so or less. But anyway, with that being said, let's just go to the trends. Let's go to the action. And here you are. This is the SPX. Here is, that's the symbol. Here's your November low. Here's your really, really strong trend. And we're hovering right around here. 3 different times or even more, we've had a few different spots when you had to take some risk off to then regroup the trend. Once was right here. You had another time right there on this false breakout. So really, these false breakouts have given us some clues to take some risk off, look for a cute short, and see what happens. And each time, it's been relatively muted. This one was your biggest one, which was down about 5%, and we had actually some data here. When we had this wedge and broke this area, and then we held the 50-day, and then broke it this time. Here was your breakout failure, and then boom, held the trend line, and this was another breakout failure. So now what we're trying to do is we're trying to examine whether or not this area holds. Let me get it really close so you could see it. Okay, here we are. All right, this was the breakout failure, then kind of held sideways here and traded below to come back up. This is the trend line. We were right around here at some point today, and then quickly took out the prior 2 days low. That's when you saw the stops get triggered, probably between 11 and 11:45, and then closed off the lows. So now the question is, what's next? Do we stay in this inside range and in a choppy fashion make our way lower, or do things start to fall apart? So what we do know is this is your low. Okay, you now have 1670. That was your old prior low, 1674. And then here is the 100-day that somewhat got danced around before holding in August. Okay, so that's worthy of noting. And then here also where we breached it by a day, then reclaimed it, and then rallied back on. So we're not quite there yet. So if you think about that, there's a few different ways to interpret it. One, after everything that we've talked about as far as no Fed action, government shutdown, potential debt ceiling, blah, 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 October, the demons of October and the ghosts and goblins, we're still not even at the 100-day. So as scary as every headline is the market that scary? Not really. But with the type of rally we've had this year and the type of rally we've had in the past few years, it always makes you feel like you don't want this time to be different where you get run over. And today it felt like you were about to get run over, but what happened? We didn't. So with that said, you gotta really test your time frame here and know what type of trade you're looking for. So if you go to some of the charts we were talking about, let's just go to Apple first. Apple was not ready for prime time, so to speak. Prime time means extra momentum. I guess if you put it in perspective, really not that bad. Okay, it's still in the top third of this range and well above the bottom here, but it was not ready to break out, which would have been nice, and I definitely got caught adding to my position today, and it definitely hurt from a momentum standpoint. It wasn't ready, but look in perspective where it is. It just really matched yesterday and is still above this pivot, and I think as long as it stays above this and builds, it'll get another chance, and hopefully we'll be there for that and not be too worn out. Okay, as far as Google, a little worse. The stock always gets me. Doesn't look as nice as far as look at the size of this wide range bar. I know some guys were trying to buy it here for a breakout, thinking the last 2 days we held in and we can get that, and then look what happened. And now it's right back into this area. Still very, very sloppy. You know, if you're a macro investor and you've been holding on to it, you don't really care. But for an active trader who's thinking he can get some momentum, today hurt. So I know some people got stopped out again around this 880, and if you did, you just wait, I guess, you know, and wait till we get that heavy, heavy volume, which has been hard to find. And if you didn't get stopped out, I would say watch this 868 area. That's your next little line in the sand. That's also a trend that's been intact for a while here. So you don't really want to see that break, even if you are a macro guy. Maybe you take something off and revisit. But anyway, as far as price line, I think Sprague made a little cute money shorted. Stocks had an unbelievable move. You know, broke through by a pebble and then traded off, and still looks good, still above the 8-day, still fine. I wouldn't even touch this. It's so damn wide. You could just lose money, you know, as soon as you press the button. And then we talked about yesterday the shot across the bow with Tesla. The whole world was showing that Tesla blown up, and then there was some talk that it was a staged. Either way, it felt as if Tesla was ready for some type of corrective activity. You know, could have went to 200. It didn't. Okay, it was following a strong trend above the 8-day, consolidating, going higher, and then finally, new quarter came about. We talked about being a little cautious to see if you see a change. First day, it tried to sell off and it couldn't. Then yesterday, got a downgrade. It saw the video, had your first potent down day, and then today you got your follow through. And today, some people made money back and forth, long and short. Overall, you know, a decent 2-day move to the downside. We've talked, this was the last time you saw a move like this. It had, you know, gave you that outside day as at least a clue to get out after it was extended there as well. Here was that Goldman downgrade. Then it made a new low, you know, held above the 50-day after breaking the 21-day for 1 day, reclaimed it, digested, and then continued. So what do we have up here? This is that high. This was your 8-day. I think some people got short here, got stopped out. First day to get out of the way. Some people took it home short. If you did, made sense. First day to, you know, maybe look at it that way. And if you did, you made some money short. We talked about this pivot, 175.40. It tried to stay above it. And then when it couldn't, if you were trading versus that pivot, you got out. And meanwhile, it somewhat held this trend for now. Some people draw the trends all differently, but it held it for now. And now what's your new point of reference? 168. Okay, here's the 50-day, which it has not seen in a long time. And who even knows if it's a Bible there, because it's you have to figure out if that will hold, because it hasn't been there in so long. But first, in order to get there, which a lot of people are saying it will, it's going to have to trade and break below 168 and the trend line. So maybe it does it and then reclaims it, you know, and does some type of trade like this. But until then, you know, be pretty skeptical. I would say take your trades, both long and short. That's how people made money today. And maybe shorten your time frames up a little bit. Some guys were scalping $2-3 at a clip, both long and short here, versus trying to just sink your teeth in. It's not ready for you to sink your teeth in, because now this is on alert. Something might have changed. We talk about these trends in these high valuation stocks and stay with them until they potentially change. It could have changed right here. It didn't have got engulfed. Here it held. Here it held. Now it broke below. So tomorrow you have to see what type of Tesla we have. If it hangs out here for a session or so, maybe it's changing. If it breaks below the low, comes to even the 50-day, that might mean the speed also is changing of this stock, and that's when you have to take notice. And then some people will probably start, you know, drawing this head and shoulders pattern where you have the left shoulder, the head, and the right shoulder. But again, that's so far in the future. I'm just talking about it because I'm talking out of my tush right now. So we'll see. You know, but again, this is your pivot, and now this also is resistance. If the bears want to stay in control here, they probably don't let Tesla get too far above this little spot. Okay, if it does get above them, then it negates some of the power of this down move. Facebook, which I talked about today, said it could be vulnerable. Also, those two stocks were kind of together as the leaders of the third quarter. And, you know, if some of the gas gets or air gets let out of one of them, maybe some people, you know, get a little worried about the other. And this one broke the 8-day. You look at it here. You know, first red bar that engulfed this little area below the 8-day. You know, last time it broke below the 8-day, it got engulfed again real quick. Meant nothing. Now it's trying again. Let's see if it means something. Let's see if this time it potentially could go down to 48.16. Okay, right now it's telling you, it's not telling you that yet, but it is showing you something a little bit different, that finally after an enormous move with a lot of buyable patterns here, 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 that it closed on the lows. Hasn't been able to close on the lows in a while. And I know that Twitter's filed for their IPO, so and there's even talk that it could be added to the S&P, so people really don't want to be shorted. But this bar right here, let's look at the volume. Let's see if there's any extra volume in here today. Okay, a little bit more than yesterday. It could give you some signs that you could take a little bit off, but make sure that if you're a Facebook fan and you think it goes higher throughout the course of the year, you have a viable strategy. And if for the first time, if you think that you want to catch a cute short, this is a day that perhaps could lead to it. So we'll see what happens. I love days to take notice, and what you have to do is look at them the days thereafter and act as they take place. As far as the banks, not much traction here. The XLF tried to break below this little trend line here, but held in. It's still below the moving averages, very weak. XHB, I came in long and I said, you know what, I'm not sticking around here if this market's acting weak. But again, this held right here, so it's still okay. Let's see what gold did today. Gold, let me take this volume out because I like the way it looks without the volume. Still building. These guys who are saying inverted head and shoulders, left shoulder, head, right shoulder, they still have a leg to stand on. It might not be such a strong leg, but still hanging around. I guess you could draw another trend line here. Since they can't get over this one and this one yet, give them a chance right there. If gold and the GLD were to break above 127.81, perhaps that gives you a little bit more power for it to mean something. Right now it still doesn't mean anything. If it were to start to power through with a bar like this, perhaps the bugs would get a little bit more excited. But for right now, it's a random, violent, not such a great trade. So if you're in it, make sure you have a thesis. And overall, I think ever since the Fed did nothing and we had that false breakout, we've been talking about low growth, slow net. I know for me, I've been a little chopped up where I get 2 good days, a bad day. A good day, a bad day. Really good day to get taken back after 2 days. And that's not my style. I like to hit singles. I like to hit singles and steal second, perhaps here and there. I like to be on base 75% of the time in a month, or make P&L 75% of the month, which typically, I would say is somewhat of my style, over the course of the year, somewhere around there. And since I would say mid-September, I've been a little chopped up. And if that's happening to you, I think a lot of people are thinking the same. Nobody really wants to get caught with their, pants down, so to speak, and buy the one dip that doesn't hold. Same way, you don't want to be short if the normal trend continues. And then you have divergences across the board where you have mega caps weak, you have small caps strong, you have high beta strong on days that the S&P is down, and then the next day they get just cut real quick. And that just means that you have to take your size down, expect less. If you get pleasantly surprised with a good trade or a good momentum, few days, go with it. And then just wait till there's more clarity. There will be more clarity at some particular point. We have earnings season coming up in 2-3 weeks. That debt ceiling is October 17th. Something will get us a little closer to some type of resolution, whether this is a clear-cut weak time and we go lower, or it's a normal trend. We hold the November line and we hold 1660, and the high beta names get a little bit better, and we get to be able to buy high and sell higher, which has been pretty rare in the last 4 weeks. So when the market changes, you change. And at this point, I think we're in a neutral to negative mode versus neutral to positive. I did my little sprinkler call today. Spiders were at 168. I said, if someone said you had to run across a sprinkler and freezing cold water, what would it be, 2 points higher or 2 points lower first? First they said, well, would it be 1 point higher or 1 point lower? And that I think was too tough. But I think 2 points, I think we at least test 166 before, 170. And, that's just a thought. If you want to do whatever you want to do with it, be my guest. And that's how I'll leave you on a Thursday night. Hopefully you have some nice plans. It's still beautiful in the Northeast. Go out with some friends and family, have some fun, and the market will be there tomorrow. But there won't be a jobs number because the government is shut down. Hopefully that changes soon. Let's get back to work, Washington. See you tomorrow.